wait for that bit rate to start aligning with X and YouTube before we get rolling. You'll see me moving around, looking around. I'm also sharing the link with the communities. Um, session is going to be absolute fire. I know it. I can feel it in my bones. Um, honestly, like just super ignited, and that's a good thing. I think that's the feeling that everybody wants to have deep down in the pit of their stomach, just ready to rock and roll. All right, 1 second. Let me get this out. Bit rate's looking good. I really want to just about that risk management stuff again, but save it. So yeah, we'll probably be hopping off just around 9:15 a.m. just because we're also moving on to New York session part two. But yeah, we'll give you that update. Hopefully we'll have some time to chat a little bit. We'll see. Another trading day. Here we go. Here we go. Here we go. Do that. Alrighty. T, you still there?
Yeah, I'm here.
How's your morning going?
Awesome. Um, my mornings are always great because I do my meditations in the morning.
Yeah,
So I'm always happy, strong, vital, mental clarity, everything on point.
very nice. I maybe I guess you're actually in afternoon now, or
Yeah, yeah.
yeah. In the future, I forget. I sometimes I get so uh into myself that I forget that the rest of the world is on different time zones
Different,
and
yeah, time
you
zones.
know what I mean?
Yeah.
Not to be rude or selfish or anything, it's just you know to get self-absorbed every once in a while. It's a laser focus, right?
It happens. Sometimes I do the same thing. Um, I forget that some people are in different time zones. So yeah, it happens.
Um, just looking over my notes here. Honestly, I think I'm just gonna. Why don't you just take over and do your thing? I think that's the best way to go about this. That way, we're not wasting anybody's time. And if there's time later on to chat, we can do that.
Awesome. All right, let
Great.
me share my screen. Let me know about the sound.
Yeah, pretty good.
Is it good?
Seems fine. Seems fine to me. I'll monitor chat, and if anyone complains, we'll let you know.
All right, cool. Cool. Okay, let's look at the dollar index. Let's start with the dollar index. So yesterday we had um Wednesday closing above Tuesday. So as I was saying yesterday, if we get something like this, the next day I'm expecting a continuation to the upside. And you can trade like this and even still make money. Trade in the direction of the daily close, right? If you can do that consistently for the rest of the year, you make money. It's as simple as that. If today closes above yesterday, next day buy it. If today closes below yesterday, next day sell it and then have a stop loss, right? And just do that consistently for the rest of the year and you will make money, right? Logically, there will be more closing in one direction than it wouldn't. And then if you learn just a few little tricks, then you can also avoid certain days, right? Like a day that the candle will not close below the previous day, you don't trade the next day. Okay? And all you have to do is just apply discipline and you'll be fine. Anyway, so I'm expecting a continuation to the upside to attack last week's high. So this is last week's high, and that level is 109.53. Okay. 109.53. So I'm expecting a continuation to the upside to take out 109.53. And on the H4, currently I'm looking at this last down candle here to give us the move to attack that high. So that's basically this New York session. Now, if I was to be doing trading, which is I will not look at all these pairs. We'll focus on one or two pairs. Then we will look at this and probably look at a different currency. And we will focus on just that for the New York session. So in future, that's something that we will do. Looking at this only and then a different currency pair where we'll be focusing on dollar index giving us a move to the upside and maybe let's say British pound moving lower, and then we will only focus on that. Okay, that's something that we do in future, but for now I'm just giving you a rough guide on all the pairs so that you can choose what you want to do. So as it stands, we are looking for higher prices on dollar index, and then a continuation to the downside on euro. So euro, I'm expecting price to go and attack last week's low, which is 102, 1.02232. Okay, so that will be the downside objective for euro. It might not do it today because tomorrow is NFP, so maybe they might hold and then run it tomorrow, or they can do it today. Whichever comes first, we are good to go. So I'm expecting continuation to the downside on euro, and the level is 102, 1.02241. Okay. All right. The next one will be British pound. Now, British pound did attack the 103. Let me find that level. They did attack the 103, sorry, 1.23007 level. So downside objectives for the time being is done. Hence, I don't have any downside objective for the moment on British pound because this is a very, very important low and they've just taken it out. So you want to wait. Why? Because this is a yearly low. If you look all the way here, that's actually 2024 low. If you go to the 12 months, you see that that's a yearly low. It's a very important low. Hence, whilst we are below it, you need to be careful for continuation to the downside. So yesterday, when I gave that as a target, lower time frame, you look for an entry to go and attack that low. As it stands, I don't know whether they're going to reject or continue going lower. We will see. So downside objective for British pound is done. So focus on euro because euro is being held. And I think yesterday pretty much I discussed something like this, where sometimes they will hold one currency from going lower and then they will send the other one lower. So this was last week's low and British pound has taken it whilst euro is holding, right? What is the reason for that? The reason is euro pound is being sent higher. Okay, so when euro pound is being sent higher, it means that euro is stronger than the British pound, right? So now that the British pound has taken out that low and euro pound has traded into premium relative to this range, they can then send the euro to catch up with what the pound has done. Okay, that's why it's important to focus on the euro going forward and leave the British pound alone. Okay, so between euro and pound, I prefer euro for downside objectives as we expect the dollar index to go and attack previous week high. All right. Same thing with Aussie. I think we're pretty close to it. It's still playing around, but it will. Okay, so they came, I think, 2 pips or 3 pips away from it, 0.61702. That's the next downside objective for the Aussie. So expect a continuation to the downside. So with the expectation of dollar going higher, Aussie could also be a pair that you can trade, similar to the similar to the euro. Instead of taking the New Zealand, because that is far away, you can focus on Aussie. So the right pairs, in my opinion, if you're day trading or even scalping, is to look at Aussie and Euro for today or even tomorrow. Okay. And leave New Zealand alone, even though it might continue going down. They might hold this one because we have this potentially coming down because we are in premium relative to this high and this low. So we can get a move down and that can cause the Aussie to be the weaker pair. Okay. So just pay attention to Aussie for a potential move to attack 0.6170. And sometimes it can go just a little bit lower. There is a institutional figure level here, which is the 0.6150 level. You can aim for that because that is something that maybe in future I'll talk about, the institutional levels. Okay, I actually have an indicator that will depict all these institutional levels, and if you pay attention to those levels, you will see most of the time that is where price is actually going. So if I was to show you institutional price levels, how it looks like. So this is how it looks like, right? The blue and the red levels. So the blue level is the full figure, and then the red levels are the mid figures. Okay. Now, if you pay attention to what price does, you'll see that those are the levels price is always kind of aiming for. Okay. So the next downside objective, once we go below this low here, it can reach for the 0.61500 level. So there is a bit of more room to the downside. It's about 53 pips to the downside, right? Okay. Let's look at gold. So yesterday we had gold reaching for my target, as I was saying. And once we got there, that was me done. So we did reach for the 2.683 level right here. And pretty much I was out of the trade. And you can see is kind of going high again. I'm not bothered. I'm not interested in what it's doing currently. It can keep going higher. That's fine. I'll only trade if we pull back inside the range again, because one of the easiest way to trade is always trade inside a range. Okay, that would be the easiest trading style that you wanna focus on. Whenever price creates a range, a high, a low, and then a high, and price comes back down, that is classified as a range. You wanna trade inside a range all the time, on all time frames. That would be your best, I'd say, trading opportunity. When it's outside the range, it's kind of difficult because it can pull back or it can continue going higher. Hence, you don't really want to trade when price is outside the range. When it shape itself to come down, you can go counter trend and then go back inside the range. But again, that is still risky because it can resume going up at any point in time. So when it's actually inside the range, like here, that is the easiest trading opportunity, right? So that's why I was confident with gold going higher. So now we are outside the range. I'm not interested. It's actually still within another bigger range, which is this high and this low, but overall it's kind of consolidating. So I'm not really interested in it. I just love this one and that's it. So right now, as it stands, it can reach for this candle's low. So if we do have any gold traders around, if we do have any gold traders around, you can aim for 2.69667 level, and if we go through that, you can then aim for this level, which is 2.705. Okay, so if they go through the 2.696 level, then you can aim for the 2.705 level. Okay, so that's the upside objective for gold. Looking at crude oil, yesterday we talked about this being the upside objective, and they did reach it, and then price rejected. And I said that I'm not interested in what it's going to do next because it has reached my upside objective. Looking at what it's doing now, I think we might start coming lower. We might start coming back maybe to, they've already touched this candle's high. So they might come in here. They might come in there. So 72.70, that would be, I think, the next downside objective on crude oil. So on the lower time frame, I like the way price rejected here. Hence, I will look at this as a potential pullback into a H4 dealing range, this high to this low, right? So we might get a rejection maybe during the New York session, and then price will come to 72.70. So the way I would look for the entry in here be to wait for the H1, I think at a specific time between 2 and 3. Now, let me just give you one time of the day that crude oil loves to move. So if you look on my screen, you'll see that I have some shaded colors, right? Those are times of the day that the market loves to turn around and move. So crude oil loves moving or loves turning around during the green, or I would say lime color. Okay. The lime color, there's always a turn, most of the time, a turning point in the lime color, right? So that's the time that we are in right now. So between now and 3, that's what this one is showing. Between now and 3, I would want to see crude oil reject. So this is time based, right? So between now and 3, you want to see something like this, a turnaround in price. And then you can look for the continuation to the downside to attack this equal low and then trade into 72.70. Okay. So how I how I'll trade it. I think yesterday I did show you how it looks like here. So on the 15 minutes, remember I was saying if I was going to scalp, then I will short here and then attack this low, because there was a turning point during that time right there on the 15 minutes. So if you look on the 15 minutes, if I zoom in here, that's when price turn around, right? So with that, then I'll go short and then go lower. So the same thing right now on the M15. If you see that turn around um, like this, an aggressive break through a down candle like that. Okay, if you see something like that over here during the New York session, right, then you can look for the continuation to the downside. If it doesn't, then stay away. At least that 15 minutes breaking the last down candle will be enough. Why? Because when the market opened, we've been going up since morning. So if you look at the opening price, the opening price is at here 5 a.m. in the morning, just 5 a.m. GMT. Okay, so when we do open that time and we trade higher, if we are expecting lower prices and we trade higher, then we want to see a rejection to go down. Okay, so I'm expecting the rejection during the New York session. Maybe this will be the last down candle and then price will trade through it. Then you look for the sell to come down. Okay, so that is crude oil for you. Let's move on to now cryptos. And I think I'll just start with what we have here, which is hype. Okay, now I think we talked about price coming into this gap and then expecting potential rejection, but you just need to stay put until we get the confirmation. Now, confirmation is one of the things that as a trader you need to always look into. Why? Because you cannot assume, okay, with the kind of account that we have, when you assume price is going to do something, you're always going to be in trouble. You're always going to be in trouble if you assume. Okay, so always pay attention to when price is giving you a bounce. Okay, it does not mean price is reversing. Understand the difference between a bounce and a reversal. On the higher time frame, when price is reversing, you will see it. Lower time frame bounces are not reversal for higher time frame. Okay, so on the lower time frame, this rejection here, it does not equate to price now going higher. Okay, it's just traded to a high time frame level and is giving you a potential retracement and then a continuation. For price to reverse, it needs to show you that it's reversing on a higher time frame. Okay, that's why when I started, I've always been talking about the daily and the weekly. You don't see me talking about H4 much. I'll only go on to the H4 if I see a potential trade idea. That's when I'll go to the H4. But mostly, you have to stay on this higher time frame. So with hype, I think they might print today as a down candle. I like the way it's coming down because the more aggressive the move to the downside is, the better for price to reverse and go higher. Because the more aggressive it is, the more you can know someone with big money has stepped in. Now, that stepping in, if we are bullish, is good because that is a sign that they are buying heavily when the candle is big and aggressive and fearful. Okay, it means that they are actually buying aggressively. Hence, I would want to see that. Now, if you are a buyer, most of the time you want to see something like that. Okay, and it goes contrary to what most traders believe in or what most traders are used to. Why? Because they've not trained their eyes to see how investors or institutions trade. Right? So when I see this type of candle, especially okay, when they give this kind of bounce, because this kind of bounce is what will draw buyers in, and then they will go against them. And I think I gave you a small understanding of how, smart money or investors, they would like to trade. When this bounce happens, what will trigger in most traders' mind is going up. Let's buy it. Now, when you buy it, that's when the people with big money will be actually accumulating the sell. So they will sell against you. And then as it moves lower, okay, then they will start buying. So the last down candle prior to the move up, that's where their buy will happen or their buy will happen. So as this candle moves lower, guess who is actually accumulating longs? Because now everybody is afraid to buy it. So there will be sellers. Now those sellers are actually helping to feed the buying that this quote unquote investors want to get. Why? Because as it's moving down and you are selling, someone has to be on the other side buying for you because there cannot be a trade without a buyer and a seller. So when dumb money is selling, and when they get caught into this going down, then smart money will be on the other side, or investors will be on the other side saying, thank you, thank you, thank you. So by the time they get to a certain level and they've accumulated all what they want to buy, then price will reverse and then it will go higher. Okay. But you need to understand the location. And I think I spoke about it yesterday. You need to understand the location that this is happening. Because if you think that every down candle is a buy from smart money, then you're going to get it wrong. So you need to understand the location that this particular thing that I'm explaining is happening. Okay. So if you go to Bitcoin, right, you will see that this move currently happening, it could be a buy. Why? Because of what I explained, I think for the last 1 week, that we'll be expecting price to come for the previous month low. So as it moves lower now, guess who will be doing the buying? Remember, there cannot be a buy without a sell, and there cannot be a sell without a buy. So when price is going down, someone is selling and someone is buying. Okay, very, very important. Someone is selling and someone is buying. That's what will establish a trade. For price to move from 1 to 2, there needs to be a buyer and there needs to be a seller. Someone has to bid for 2 and someone has to sell to that bidder for price to move to 2. Okay. And in I think when I was learning this, um, the understanding that came was we are actually all trading our beliefs, because a buyer believe price is going higher and the seller believes price is going lower. So when price is at 1, the one buying believes that price is going to go higher, and the one selling at 1 believes price is going to go lower. I mean, price cannot go below 0, but sometimes it can, because oil went below 0. But let's say price is trading at 100. Let's make it more real. And someone is buying at 100, right? Whoever is buying at 100 believes that price is going to go to, let's say, 110. Whoever is selling at 100 believes that price is going to go to, let's say, 90. So there is a seller at 100 and there is a buyer at 100. Okay, and then both of them will now establish a trade. Whichever direction it goes, one will lose and one will win. That's the end of it. So every single trade, every single move that is happening on the chart, there is a winner and there is a loser. Okay, there is a winner and there is a loser. So when it's going down, all this to explain to you, when it's going down like this, there is a winner and there is a loser. Who is winning? In the beginning, you would think that the sellers, okay, are winning because it's moving down. But buyers are actually winning. Why? Because when it's going down, that is the smart money being the buyer as it's moving down. So initially, it might seem as if that they are losing. Okay? It might seem as if they are losing, but eventually they will win. Why? Because when price turns around, if we are bullish, right? Let's say for example in here, when it was going down, okay, initially you're gonna think that those that were buying. Now you have to flip your brain here. When it's going down, there's someone buying and there's someone selling, as I've just explained. So initially you're gonna think that those that were on the other side of the buy when it was moving down were losing. But when price got here, who is now winning? Those that were buying, and those that were actually selling, okay, they were losers. Okay, and that's what I'm trying to explain with hype right here. As it's dropping, someone is on the other side buying. So if what I'm expecting is right, then smart money or investors are the ones buying. Okay, so that's when they can get their orders filled. Because when it's selling, going down, the ones that are selling, okay, they are feeding the other side of the trade, or they are helping the investors or institutions get their orders filled. And then once they get it filled, then price goes up. Okay, and how they do it, today might be the last day. Looking at how it's dropping, I want to see maximum 3 down candles. If we have tomorrow closing down, then we might not have a sell. Okay. I'm sorry, we might not have a buy. So I would want to see today being the last down candle, and then tomorrow we can start expecting a potential reversal. Okay, so tomorrow I would want to see price starting to give me a rejection to start coming back up. Right, so 3 down candles most of the time, that's the max if they are going to buy. If it goes beyond 3, then something else is happening. Then they might be buying on the weekly. So then we have to switch to the weekly and then expect these 3 down candles to be the buy. And then on the weekly time frame, we can start anticipating potential reversal. Okay, so hype is not ready to go higher yet. If you are selling, I think today you can, by the close of today, you can close almost all of your trade and then sit on your hands and wait for potential reversal. And once you get the reversal, you can start looking for your buy. Let's look at AI. AI, yesterday I gave a level which was this low here. That would be our mental stop loss, right? And they've gone through that. So right now the buy, okay, is going to switch from the daily to now the weekly. And sometimes it's if you don't understand the way I trade, you might think, okay, why are you shifting your the way you're looking at it, right? Because you can see a buy on the daily, you can see a buy on the weekly, you can see a buy on the monthly. So when I'm expecting a buy on the daily, I'm expecting a certain number of candles. Here, that was 3, right? And then we go back up. I'm expecting it to continue going higher. Now, if that does not happen, then I'm wrong, but it does not mean I'm wrong. It just means that the buy is actually happening on a different time frame, which is the weekly. So you can see here, we have one down candle, we go up, one down candle, we go up. So this will be the next down candle, and then we will expect price to continue going up. On the weekly, again, they can buy with 1, 2, or 3. Okay, so either one candle, 2 candles, or 3. So when one candle prints, then the next one, we anticipate that it should be a continuation to the upside. In this case, on AI. Why? Because we don't have enough data. If we did have enough data, then I would say maybe it's going to pull back a little bit more. But since we don't have enough data, I think this will be potential accumulation on the weekly, which if you get it wrong on the daily, okay, then the weekly will make it up. You're going to get more because the weekly is the one being accumulated, right? So with today trading through the mental stop loss, I want to see the week end as a down candle, okay? And then next week, I'll anticipate same thing. I think you can see examples in here. I will expect the candle to go higher. So as it stands, if you are bullish, be patient, because I am not bullish right now on the daily. I'm bullish on the weekly. So I'll wait for the weekly to close, and then I'll look for a potential buy going into next week. And that might start with, again, a down candle being traded above on the daily. But that will be in next week's candle, or it can start this week. Today is Thursday, so we can get the close above maybe Friday's candle. So as just pretend that this is a Friday, then we can get Saturday to give us something like this, and then Sunday will just be a small candle, and that will initiate the beginning of the reversal. And then next week we'll just start, and then we'll just start going high again. Okay, if you want to understand what I've just explained, just go back and study this area or this area, and you understand what I mean, right? So AI not dead, it will still go up because they are accumulating on the weekly time frame. So let me give level that they can reverse from. So what kind of level can they reverse from? Now, I have given a way to look at price for upside objectives, right? But when price is retracing, how far can it retrace to? Well, if they trade through up candles, you can project. You can project the up candles to the downside, okay? And then look at the 127 and then 618. Most of the time, those are the two levels that price will hit, and then you're gonna get either a bounce or a reversal. In this case, since you're expecting it to go higher, we can either reverse from here and price will not go down anymore, or they can come in here and then price will now go higher. So the weekly candle, in this candle, it can end here and then it will not go down anymore, or they can continue going lower into the 168 level, and that's when it will reverse. Ideally, I do not want to see them even trade through this weekly last up candle. That would not be good. So preferably here, right? Or they can trade into deeper into this candle. Now, that 127 level does not mean it's gonna hit it to the pip like this and then reject. No, sometimes they can give you a wick. like that and still be respecting that 127 level. Okay, so tomorrow might give you a candle like this, and then it will reject and still respect that. Or they can continue going down and give you a wick here and then reject. Okay, so let's see how today is going to close, and then by the end of the week. So tomorrow, I will not be expecting a reversal. I will still be expecting either price pausing, or it might give another down candle. The level that they do not need, we don't want them to close, is this low. You don't want to see the weekly candle, this weekly candle close below it. Okay, because if it does, this will give you this as the last up candle prior to the move down, and that's not good for bullishness. Then maybe price will consolidate. It's still bullish, but maybe we move into a consolidation. So the weekly candle does not need to close below this. Okay, it can take out the low as a wick like that, but not closing below it. Okay, so AI, that's what we'll be looking at. So if you are bullish, stay tight. It's still bullish. This is just a pullback. It will continue going higher. Let's look at Solana. Okay. So Solana, as I think I mentioned, I would like to see them clean out this, come down, take out this low, and then we'll start looking for higher prices again. Now you have proof of why I don't like seeing this as a reversal, right? It's not good. But if we had something like this, right, and run below the low, and then we run higher, then that is pretty cool. Okay, so as it stands, Solana can go for 174.97, and then we will expect another rejection. That is going to mostly based on Bitcoin, right? Bitcoin is going to attack this low. It could also go for, because they are too clean, they are very close to each other, right? So it could also go for 90,724. It could go for that, and then we might reject. Okay, this is the actual level, which is the monthly low, December's low. We could take that one out and then reject, but I would like to see them take this one out as well. Okay, on the let me clean my chart a little bit. On the monthly, okay, that is that level. So this is a big void. Okay, it's a big gap. Now, if we are bullish, I would only want to see them take out this low here and then immediately reject. Listen closely, because this might affect, I don't know, those that are holding Bitcoin. I would want to see them take out this low and then immediately start rejecting. So the weekly time frame does not need to close below this low. The weekly time frame does not need to close below this low, which is December's low. If the weekly time frame closes below the December's low, we might be in for a bigger pullback. If the weekly, this time frame, if we close below the monthly, where is it? This one, that's December's low. Yeah, that's December's low. If we close below it, we might be in for a bigger pullback, and that pullback might be this low to that high. Okay, so I'm not saying let's hope and pray because we can't do that in trading. Watch how price is going to trade below that monthly low. Yeah. You want them to dip just below it and then reject. The way they're doing it right now is good. It's coming down aggressively, but we want to see them reject immediately after that. Right? So pay attention for the buyers. Don't buy if we close below this low. It's just a word of advice. You can do whatever you want to do. Okay? I'm just showing you what I'm seeing. If we close below this and you start seeing a rejection, do not buy it because it might just print an up candle for redistribution. So if we close below that and then you see an up candle printing, it might just print a redistribution, maybe 1 or 2 up days, and then it will continue going lower. Okay, so this week we do not want to see them close below this. I think I already showed you the type of candles I was expecting, 1, 2, and then take out this low, and then maybe tomorrow a quick rejection. That's what I want to see. If we take out this and tomorrow or Friday does not give us a quick rejection, because that will still be within this week's candle. If you don't get a quick rejection, then for the time being, we need to put Bitcoin going higher to the sidelines. Okay, but I'm here tomorrow, so we will see. Maybe over the course of the weekend, I will not be able to update if something happens, but I'm just giving you the narrative so that if you're a Bitcoin trader, you know what to do. Ethereum, I think it's very clear where it's going right now. Yeah, aiming for 3097. Let me go back to Bitcoin and give you the levels. I forgot to mention them. So 9191271 is the next downside objective. So if you are a day trader, I think you can look at how since we rejected, they've never gone above an up candle, right? So any up candle that you see, you can place your stop loss above it and then aim for continuation to the downside. Okay, so if you're a day trader, you can place your stop loss above an up candle on the H4 and then look for continuation to the downside. Okay, so the downside objective is 91267. It can reach for 90724 as well because they are very close to each other. So that's equal low to me. Okay. Ethereum downside objective is 3097.65. Again, I think they've just gone below these up candles. So stop loss can go above it, and then you can look for continuation to the downside to attack this low. And we do also have this equal lows in here, which can also be attacked, but aim for this one. That will be the main one. As we go below that, start paying attention to the up candles. Now, let me go back to Bitcoin again. How do you know price will reverse? Okay, based on what I'm saying, how will I know price is reversing? Once they take out this low and that low, especially this one, start paying attention on the H4 time frame, the up candles. You want to see a quick rejection trading through an up candle. That will be the first sign that we might be reversing. It does not mean we've reversed, because for price to reverse, it needs to start showing you. It needs to start showing you on the higher time frame. It needs to start showing to you on the higher time frame, not on the lower time frame. But however, we can start looking at it from the lower time frame and up. So the H4 is the closest to the daily. Hence, once they take out the low, okay, start paying attention to the H4 and mark out all the last up candles prior to the move down. Currently, is this one here. Okay. So start paying attention to it. And let me just say this. One of the ways that I've seen price reverse is they will run up on the H4, run down, and then reject. So it might not be here. This rejection might not be it. They might come back up. Let me show you how it looks like on hype. It looks something like this. When it's about to reverse on the H4, they might run it up to form a swing high and then send it down. Then it will come back up. I think I'll explain into depth in the portal once the portal is open. Then I can go more into details. But for those of you that will be trading over the course of the weekend, since I will not be here, I'm just trying to give you more information to see when it's about to reverse. You will see a run up. Remember, that run up will be what will draw in the buyers, and then they will start going against them. Then the move that will start moving lower will be the ones that smart money or investors will start buying. That will be your last down candle. Okay, so most of the time, your last down candle, I think if you've been studying ICT for a long time, it talks about breakers, right? Your last down candle or your last up candles will most of the time have a breaker. And how a breaker forms is a move up before they move down and then they go above it. Okay, so when you're expecting a reversal, that's what you want to see. You want to see a run up first and then they move down. Since we don't have a run up first on the H4, okay, you might want to wait for something like that first. And then once it falls down and it starts coming back up, then you can start being confident that they might be going higher. As it stands, I don't see that. So I don't expect a reversal to happen anytime soon on Bitcoin. All right. So that will be that for Bitcoin. I think Ethereum will be the same. Expect a continuation to the downside, and maybe once it's ready to go up, you will see it as I'm mentioning. The same is the same on every pair. It's not unique to Bitcoin. It's the same on every pair. Let's look at our favorite one, Tattoo.
Let's go. That's all.
Yeah, let's look at Tattoo. Okay, so Tattoo, I think I gave you the level that I was interested in. We didn't quite get there yesterday, and we are now coming to that level. Now, remember, this is how they lure people into the market. It did not get to the actual level, and it's always in there, plain sight, showing everybody that they will always do some form of manipulation. Okay, when price does not get to the exact level that we expect it to get to, don't chase it, because you chasing it means that they're going to go against you. That's all it is. So when it does not trade to where you're expecting it to reverse, where do we expect price to reverse? Let's learn a little bit. Inside an impulse leg, like this. Measure the range, high to the low. Find 50%. Below 50%, find a fair value gap. Below 50%. That fair value gap is going to be within 618 to 79, 0.618 to 0.79. Find that. If it's there, like here, that's exactly where you want to be a buyer. Okay? It does not guarantee it's going to go up or down, but that's where you want to buy. Inside the range, that's where you want to buy. If it does not get there and it goes higher, don't chase that, because it will come back down again most of the time, right? And then it will go back up. So whenever you see price in a range like this, find 50%, below 50%, find a fair value gap. that fair value gap should be within the 618 to the 79 retracement level. That is exactly where you want to be a buyer. If we are bullish, don't buy anywhere else. If you can't be there for price to come to that level, then use a buy limit, right? That's what I'm going to say for now. So that is why price has come back down. So where we are now, we should be going back up. So this gap ideally should hold. So our mental stop loss on the H4 should be here. Because if we go through that, then there's a high probability this low is going to be taken. So if we go through this level, they will go for that low, which at this stage, I don't want to see that on Tatsuo. But I don't control price. So I'm just giving you what I'm seeing. Okay, that's always going to be what I do. I'll show you what I'm seeing, and then you do what you want to do with it. In future, I'll show you some trade ideas, but most of the time, I will be your eyes for the market. And then if you listen, you will be healthy in the market. If you don't listen, you get sick.
Nice.
Okay, so that's where I'm expecting price to reverse. If we trade through it, then they might probably go for this low and that low. Okay, so that's where our saving grace should happen if you're gonna go back up. So that's all for you. On the weekly, you can see that the candle is still green. We want it to stay at that level to remain green. If we don't stay at that level, it might reject and turn red, which I think it shouldn't do that. Okay, so that is where we should be seeing a buy coming. Now, based on what I am seeing, let me see on the 1 hour time frame. Okay, so this is what I was talking about on the daily time frame. Sorry, on the H4. When price is dropping, okay, and you want to expect a reversal, I'm gonna be like a parrot. I'm gonna repeat the same thing over and over again. You want to see a run up and then they move down. That run up will be the breaker. So when they are approaching a level that you're expecting price to reverse, you want to see that run up, then move down, then a rejection. Okay. Currently, the move on the H4 is not where price is moving. It's actually moving on the daily. Okay. It's moving on the daily. Hence, it's still bullish on the daily because they're trading above this high. So it's still bullish. So this will be a pullback. When it's pulling back on a daily like that, that pattern that I just taught you can happen on the H4 or on the H1. So on the H4, you can see this candle moving up and then moving down. Aside this weird candle that presented itself, it should have been a down candle. But that's the same thing. They move up to the move down. Okay. Now with this candle presenting itself, I will not use the H4. That's why I will go on to the H1. And I want to see the move up to the move down. And then I want to see a rejection. So where we are, this should be the breaker. If we are going to go higher, this should be the breaker. Okay. Because it does not need to trade through the gap on the daily. It does not need to go here. So this run up, this move down should be it, and then we go higher. So I'll start monitoring price from here to see if we break that. If we don't, then there's a problem. Okay. So you can study price from the high time frame, take it all the way to the lower time frame, and then manage what price is going to do. If it's going to reverse, you will see. If it's not, you will see. So what I'm saying about price trading through this and then coming down here if it's going to do it, you will see it on the 1 hour time frame. Why? Because the 1 hour will not go up to break this. So the 1 hour print it down, and then it will print it down. Then you know it's not going to do it. Because if it's going to do it, it should be going up from in here, because that's the gap on the H4, which is within the OT level, the 618 to the 79 retracement level. Okay, so where we are, let's pray the gods will come in and let's pray the gods will come in and buy it. I'm just joking.
And this is definitely super amazing, super educational, and in terms of capital allocation and stuff like that for a trader, like it's important to understand that you got to apply proper risk management techniques. Holders is a different story. Like
Mm-hmm.
that's
Mm-hmm.
you look for those entries at some of these levels. That's where you keep adding to your portfolio, right? And that's watching this and understanding some of these movements, and it gives you the ideas and the proper entry points for improving your overall portfolio across your whole array of or basket. So it's not just for trading, right? It's also for actually accumulation. Like you are the smart money by watching this. You become smart money.
Yeah, yeah. Essentially, that's the goal. You want to become smart money. You want to understand how they do it, so you follow their same footsteps, because they are the ones with the money, right? They have more than you do. Hopefully, in future you have more than they do, but for now, they have more than you do. So why don't you learn from them? Why don't you um, understand how they trade so you can do the same thing, right? And I like the fact that you brought in that risk management. It's crucial, absolutely crucial, that you learn how to manage your risk. Now, I don't even subscribe to the idea of risking 1% per trade. I don't do that. I've never done that. Never done that. Initially, when I started trading, I was doing like 5% risk because I didn't understand risk management. But when I did get the understanding, I've never risked 1%. I do have, so I learned that there is a season in the market, or there are seasons in the market. There are times that the market will be favorable, and there are times that the market will be less favorable. So when the market is favorable, for example, between September, October, November, sometimes first 2 weeks of December, the market is really favorable for big moves. During that period, my maximum risk is 0.50. Now, when it's less favorable, which is January, February, most of the time, and then June, July, August, mostly August, that's less favorable. So during those months, my maximum risk is 0.25 per trade. So I don't ever risk 1%. Why? Because risking 1% is something that is out there, right? And most people subscribe to that. And you need to understand the herd mentality is there for a reason. The herd is always going to be led to the slaughterhouse. So learn to be different. Don't always go with what majority is doing. Learn to do something that you understand. Okay? Understand the market and understand yourself, and then do something that makes you comfortable, right? If
And
you can
Tia,
be disciplined, yeah, go ahead,
sorry,
Igor.
I don't mean to interrupt you. I apologize. Go ahead.
Oh, go on, go on.
I was just gonna add to your point of doing something different. Like, if you start looking at other time frames like 30 minutes, 2 hour, 3 hour, 6 hour, right? 3 day, like that's what you do. Why not do a 3.5 day even if you can, right? Like that's the thing is do go outside of the box,
Yeah.
and that's yeah, it's right on.
Yeah, you always do something different. Don't always go with the head mentality idea because what everybody's doing most of the time is wrong, right? That's why it's so popular. Everything popular is not the right thing. The less popular things are the right things, um, majority of the time, because what is popular is just to draw attention, right? So if you are learning to trade, learn to manage your risk is one of the biggest things that the more depends sometimes too, but the more you trade, the higher the probability of you even losing. Okay. So trade less, manage your risk. Money, we make money in the market like this gradually. Okay. We don't make it like that. If you do this, your downfall is going to be sharp. Okay. So learn that money in the market is made gradually. Okay. With consistency. Then overall, you're going to learn as price moves in your favor. You're going to learn as your equity moves higher. If you go like this, trust me, your downfall is going to be worse than the climb. I've been there and it's not the best feeling ever. Okay. So um, there will be more lessons on risk management, but for today, just learn to manage your risk. And last thing, and then I'll end here. All that I'm doing here is to help you see what the market is doing. And then every now and then, when I'm very confident in a trade, and I'll show you, I'll take a trade and I'll show you what I'm taking. The rest, I'm going to point to where it's going. Now, you do, maybe those in the portal will learn how I trade in future. But most of the time, it'll be me showing you based on my experience what the market is doing, and then you take advantage of it. I think most of you have your trading strategy or your entry techniques already. So you take advantage of where I'm pointing the market to go. If you don't have a trading strategy or you don't have entry and the other stuff, then in future you learn that in the portal. But all that I'm doing right now is to show you what I think the market is doing. And then if you have your strategy, you can trade in that direction. All right. So with that, I think I will let Igor close us for today.
Oh, I thank you so much for once again for such a beautiful session, and I don't think I'm going to even add anything more. That's great. We've been on for just over an hour, and your value. Thanks so much again, and why don't we just sign off?
All right. I'll see you all tomorrow. Have fun. Tomorrow um, we will observe NFP.
Nice.
We will
Can't
observe
wait.
NFP together. All right. Take care, everyone.
Take care.